Good morning, everyone, and thank you very much for joining. This is the Morning Market Review. It's Thursday, the 24th of August, and my name is Russell Shaw. I'm a Senior Market Specialist at FXCM. My email address, just want to highlight that, rshaw@fxcm.com. If you'd like to correspond with me, that is the email address to use. Just going to go ahead and bring up our disclaimers. Start off with the high-risk investment warning. We'll keep this on screen for a few moments. Good morning, Kim. Thank you very much for signing in. Much appreciated, as always. Thank you for joining me this morning, guys. Really appreciated. All right, let's just bring up our market commentaries disclaimer. Thank you. And our references, MarketScope 2.0 and TradingView.com. And the big news overnight is NVIDIA's results, really coming up with strong quarterly results. And really the big news for NVIDIA was the outlook. The forecast for revenue is for the next quarter is, or for this quarter, is $16 billion, which is above a consensus of 12.6 billion. So very strong earnings coming out of NVIDIA, and it's changed the technical outlook somewhat and perhaps gives us something to work with. The market's been tough for quite some time. It does look as if there is some evolution, it's evolving, and let's take a look and see how it's evolving. Just going through to the real yield, because we have been keeping an eye on this. It's coming down quite substantially over here. If I change this to the daily chart, you can see really how it came down yesterday. Okay, so we'll just keep an eye on this and see if it comes down further. I think that real rates coming down would give us a tailwind, typically on the risk front. So we'll keep an eye on this. But continuing from our webinar yesterday, we did sort of a top-down a look at NASDAQ, and we looked at it with regards to, if you recall, the we looked at it on a monthly basis, didn't we? And we saw that it was in zone 1, and we've got signal 1, we've got signal 2. All right, let's get a little bit more granular today. Let's get a little bit more granular. Let's take these out, and let's take a look and see what's happening on the weekly chart, and then we'll come down to the daily. Okay, so I think we can take this moving average out. I don't think we need that. Starting with the weekly peaks and troughs. So we're looking now at a trend analysis, determining trend. We've got a series of higher troughs followed by higher peaks. That is a defined uptrend. Okay, what did happen with NASDAQ, and we talked about it for a fair amount of time, was the fact that the NASDAQ went overbought. Okay, it went overbought at this area here, and it did introduce an element of worry. And then what's happened is, over the last 3 weeks, there's been a pullback in NASDAQ, and the overbought conditions normalized. Okay, so the overbought conditions normalized. All right, so I'm just going to bring up the chart again. It closed. I beg your pardon. All right, let me just bring that up. All right, it should come up in a moment. All right, give me a moment. Sorry, that was. It was highly annoying. I beg your pardon. One more moment and we'll get the chart back up. All right. Okay, here we go. All right. Sorry about that. And what I wanted to show you is on the weekly chart. So we've got these series of higher troughs followed by higher peaks. That is the uptrend, and we've got now normalization in the RSI. RSI has gone back to normal levels, and now where it's getting really interesting is the current chart action. So let me bring in an arrow here. So last week then is a potential reference candle reversal, okay? And then this week's candle looks as if it's giving us condition 2 and 3. What's condition 2 and 3? Condition 2 and 3 is moving above last week's high, and condition 3 closing above last week's high. And if we get a close above last week's high, then we have a potential reference candle reversal here. And if we have a reference candle reversal there, then what we can do is we can put in the next higher trough. Okay, I'm going to put in HT question mark because we've got to get through the next 2 trading days before we can confirm that we've got a reference candle reversal. This is a weekly chart, so we'll only know at the end of trading this week whether in fact we do have a potential turning point. And if we've got a turning point, remember these reference candles tend to start swings. They don't always lead to swings, but if we get a reference candle reversal, it's a platform to work with. And if we've got the higher trough confirmed, well then we may get the next higher peak in. Okay, so what we want to do here is we want to keep an eye on the real yield. Of course, we'd like to see that come down. If that real yield comes down, then that's the tailwind we're talking about. But technically, we're getting that reference candle reversal. Let's go through to the daily chart and take a look what's happening on the daily chart of NASDAQ. And you can see that it's pushed from zone 3 into zone 2. Zone 3 is our weak zone. Zone 2 is our neutral area, but a movement from weakness into neutrality is relative strength. It's a step forward. So we've got a big movement forward, and the next target would be zone 1. We'd like to get into zone 1, and once we get into zone 1, the longer we stay into zone 1, the more probability there is of higher values ahead for the NASDAQ 100. Take a look at the RSI. The RSI's popped above 50. The longer it stays above 50, the greater the likelihood we get a positive swing. Take a look here. Here it's above 50. Here we get the movement up. Okay. Here's where it drops below 50. That's where we get the movement down. So there's a technical change that's taken place here on NASDAQ. So potentially now moving from a risk-off environment into a risk-on environment, and really catalyst seeming to be the NVIDIA result. Be careful, we're getting Jackson Hole effectively starting. I think it starts today, but the big keynote's tomorrow. I think the speech by Jerome Powell tomorrow is going to be absolutely important. Plus the speech from President Lagarde tomorrow as well. So there's a potential market movers right there. The fact that the Nasdaq's pushed up, let's just go down to the hourly, see how we're doing on the hourly. And again, take a look at your stochastic here. If the stochastic hugs the 80 area, you get a really good underlying momentum. See, there's the swing right there. Okay. Take a look where we are right now. Okay, it's in the 80 area. We're getting that lovely swing. It's a bit difficult knowing where this is going to end. If there is some sort of pullback, you know, the dip in the uptrend is something that we could consider, sort of, and see if we get the pickup there. But the idea here is it really started yesterday. There's the trigger 1, there's the trigger 2, and then it moved into that quintile, and the swing effectively started. So the swing quite developed. It really started yesterday. If you got it in yesterday, then you would be very happy with your position. Getting in at this stage, there's more risk involved. So some sort of dip in the uptrend would probably be some to consider. All right. So NASDAQ really changed up in the last 24 hours or so. Let's take a look at the dollar, considering now that the real yields being pulled down. Remember, that's positively correlated with the US dollar. So the US dollar should be pulling down as well. Let's just take a look at that. And we'll go through to the weekly here. And it does look as if this resistance level is acting on the dollar. We're lacking a price signal here. We've got the price signal on the NASDAQ, potentially. We just got to wait for the close of trade for this week. We don't have it for the dollar. What we need is some sort of reference, and we're a candlestick behind here. So something like this. Okay, something like this. But we don't quite have it yet. Nevertheless, the resistance level is looking quite interesting, isn't it? So we'll keep an eye out on that. If we go down to the daily chart here, there is some weakness. You can see how the dollar slipped yesterday, okay, and now it's challenging the neutral area. It's not as obvious as the NASDAQ chart. So the fact that it's not as obvious means something. The idea here is we'd want some more, I think, definition in terms of the technicals here. It's really on the border of zone 2 and zone 1. It's really on the border. So it makes it a bit tricky for us. The US 10-year real yields coming down. The weekly seeming to push down as well. But the daily chart just not giving us the relative weakness. It's not really giving us the jump from zone 1 to zone 2. Let's just take a look at the hourly here, and what we can look for is potential signals Take a look at the central pivot. The central pivot seems to be a level to keep an eye on in terms of key reactions. The reason that I say that is you've got support here, potentially turning into resistance, right on the central pivot. And the reason that I'm looking at a resistance now is because the resistance seems to be showing some seems to be quite formidable on the weekly, and we just want to see if there is a reaction off of the central pivot. We'd need to wait for the signals, would need to wait for the EMA to cross down, would need to wait for the stochastic to cross down. Okay, so it's again a game of patience at the moment. Let's just go through to the euro US dollar, and then we'll take a look at DAX. All right, when it comes to euro US dollar, I don't like this price action. And the reason I don't like the price action is just like the dollar fell out of its downtrend, the euro US dollar has fallen out of its uptrend. The reason it's fallen out of its uptrend is it's now charted this lower trough. So again, the issue with a market that is consolidating as opposed to trending now is where we find ourselves. And we just need to see some more price action here to get the idea of trend. Are we trending up? Are we trending down? Remember, the definition of trend, an uptrend, a higher trough followed by a higher peak, a downtrend, a lower peak followed by a lower trough. There is some uncertainty with the euro at the moment. So the stock market seeming to have more direction in the currency markets at the moment for us as traders. Just keep that in mind. Let's take a look at this on the daily chart. The daily chart does still indicate weakness on in zone 3, and if we just go through to the hourly chart here, well, if there is a dead cross with these moving averages, we've already got a bearish cross on the stochastic, and if there is angle and separation that develops, and if there is a movement by the stochastic to go below the lower quintile, then we may have something on here. But just again, patience. We don't have the cross yet. Last chart. Let's take a look at DAX. See how the DAX is looking. It's just gone past the open, the cash open. So let's see how it's behaving. All right. So a lot of positivity on the hourly chart. If we go through to the weekly chart here, what would be interesting again is if we can close above last week's high. That would give us the potential high trough. Okay, then we've got something to work with. If you take a look at the daily chart here, it's showing relative strength. Okay, it's popped from zone 3 into zone 2. That's a step forward. And if you take a look at the hourly chart here, it does look as if we've just moved into the upper quintile. The longer we hold the upper quintile, the stronger the potential momentum. Okay, so we've just pushed there. It looks as if DAX has really started off the day on a strong foot. All right, so that's where we'll go. We'll go as far as that this morning. If there's any questions, just go ahead, type those in. Any questions, go ahead, type those in. Certainly the stock markets are looking quite interesting, and there's been a technical evolution over the last 24 hours. All right, no questions coming in, so let's wrap up over here, and thank you very much. Have a great day ahead, and we shall chat tomorrow morning. Thanks very much, guys.